Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, February 3rd. So as you can see, today we got a lot of news, starting with unemployment rate that was lower than expected. Labor market continues strong and unemployment is actually lower than the previous one. It's actually in the lowest point since 1967, so more than 50 years low. This is showing that unemployment labor market is super strong, and more than that, non-farm payrolls showing an unbelievable increase of 500,000, way more than double than the previous one. Honestly, this is insanely high for payrolls. Hourly earnings lowering hourly year over year, also month over month, but look at this, payrolls in the private increased like double. They doubled. So what is showing this is that labor market continues strong and payrolls wages are actually super high because employees get what they want. There's a lot of employment out there, a lot of vacancies and job openings, and companies are looking for value and they are paying a lot. So consumers with high wages spend a lot, and that is fueling inflation. This is not good news. Unemployment being higher, showing strong labor market, non-farm payrolls showing strong labor market. I don't know about you, but this is not looking good for inflation. Also, global services PMI came higher than expected, and non-manufacturing PMI also higher than expected. So economy is starting to again increase, starting to getting hot. More employment, less unemployment, more opening jobs, more payrolls, more wages, more PMI on the manufacturing and non-manufacturing side. So this economy is not stopping back. This economy is not looking down. So given this data, you may think we are in a bad situation, right? Bad news is bad news. So if we check the markets and we actually see how market reacted to this news, initially, this is the non-farm payrolls 8:30 report came out. We tanked, but look at this point of control. A lot of volume being conducted here, signs of consolidation, and look at this open. Wow, this basically explode to the upside, recover this pivot, the non-farm payrolls point, it pulled back, 45 EMA, and then started growing up and up and up. And this kind of volume profile, this P shape with the point of control up top, is short covering. And based on the data, and as far as I know, smart money versus dumb money flow, smart money is not buying this. They are selling. So this is actually retails. This is actually us buying all the dips that all these tech companies, all the stocks are putting. We are buying this crazy bull run. Look at this. Yesterday's and now a bottoming tail. I mean, 13,000 is going to happen. This is what technical analysis is showing you. This doesn't make sense from a fundamental point of view, but there's some time that markets are irrational. And this is a great example. If we check the 30-minute chart, look at this. This is yesterday's rejection of earnings, and we basically bought that up. This is insane on the Nasdaq and on the overall market. The S&Ps is actually the same. If we check the ES, we are right there, are 41.85. We are at a critical spot that we pulled back and rejected heavily on 13 on December last year on CPI data. We rejected that spot and we are back there. Look at this wedge. This is why technical analysis is so strong. Because even though fundamentals are not there, in my opinion, fundamentals are showing still inflation getting higher, not economic data, but the possibility of consumer spending still going higher, so prices will not go down. This is what fundamentals are based off. But from the technical standpoint, Nasdaq and overall market are super strong. Labor market, wages, consumer spending. The only thing that is concerning is X and Y. X and Y did pull back quite a lot. Today, you want consumer discretionary spending go up. We broke this this resistance, this pivot, and we started going higher. And X and Y is the only thing that is today a little bit worried because it's not aligned with the kind of fundamentals that you need to be aware of. Dollar is another thing that is worrying me. This is an issue. Strong dollar is not good for the economy in the long term, but I think after all this trend down, I think 101, I called this since weeks ago. I think this was consolidation and we are trying to show strength again. Dollar is 1% on the day, but be careful. Let's take a look at yields and bonds market. Look at this. This is today. What shows you is that bonds market are pricing in again another rate hike. Why? Well, we all know that wages are going up, payrolls are going up, unemployment is not cooling down, and Fed wants exactly that. Feds want every sector in the economy to show a decrease, to show cool down. And until that happens, they will continue raising interest rates. Last time it was 25 basis points because they already saw a little bit of data demonstrating that the economy was cooling down. But I think today's economic data is not showing that. And bonds market is reacting. Bonds market is saying, be careful, yields are going up. Interest rates will continue higher. So I expect this resistance to be broken. And this is the US 2-year yield. I think this is going again to 5%. My target is 5%. The 10-year, my target, again, same kind of, let me show you, same kind of bullishness, now trying to break this level. I think this is going again to 3.9. This is just a matter of time to interest rates to continue higher. And more than that, remember terminal rates. I've been sharing with you guys this for so long. We were waiting for today unemployment and wages, payrolls. Look at this. This is strong momentum to the upside on the terminal jets for April, 4.8, 4.93. Be careful. This is September. And in December, 4% increase right now at 4.65. So remember when I was saying right now bonds market trust the Fed and they think they are not going to raise again rates until the 5%. So right now they are thinking, oh well, unemployment being lower than expected and payrolls going higher, Fed will raise interest rates again until 5. They are starting to think about that. And watch these markets. Watch this. Because this is April. Next, let me show you. Next FOMC meeting is in March. So as of right now, in 47 days, on the 22nd of March, they are still saying, okay, 25 basis points until 4.75, 5%. This is the terminal rate. But the next one is May. So look at this, 50-50 more or less. 50 say we are flat, but 55% think they will go again for 25 basis points. This is the key to understand the bonds market. In May, that's after this April, in May, they will go 5%. And that's why September is going up, because the progression that bonds market are trying to predict is we are right now at 475. We will increase 25 for 5%, and that would be May. This will be April, March, April, and this will be May. And since then, we are going to be at 5% until December. And in December, as you can see on the right-hand side, 4.75, 4.65 on December. So again, going down. This is December. So this is going to be the kind of move that bonds market are pricing in, and this is more or less aligned with the Feds. The only thing that is not aligned is, let me show you in yellow, is this. Bonds market are pricing in an interest rate cut, and the Fed, Jerome Powell, said that they are not going to cut any rates in 2023. So this is the kind of progression, the kind of analysis you have to know and you have to do in order to understand why some investors are not buying this. Yields are planned to go up again. Bonds market know that. And this is why at some point, this kind of irrational move will slow down and we will pull back. Until when? And we will stop pulling back where? That's the key. Smart money is not buying this. So please don't be the retail trader that buys the top. Please don't buy this. Don't buy this. Start thinking about pullback and maybe for more healthy upside move. Don't buy the top and start back holding, because when smart money starts selling aggressively and fundamentals show that maybe inflation is sticky and Fed again raise interest rate hikes, please be patient, because this kind of move is super irrational. Trust me. Wait for your opportunity for those pullbacks, these kind of pullbacks. This was a beautiful pullback of the previous resistance. Wait for that, for your opportunity. Wait for a pullback. Wait for this to cool down a bit. And then you can buy super strength. Then you can be comfortable buying off support and previous resistances. Wait for that. Don't be too irrational. I know that Apple is 3.61%. Look at this candle. But I already explained to you that fundamentals, economic data, unemployment, labor market is showing strength, but we don't need that kind of strength yet. We need for Fed to stop hiking interest rates. And in order for them to do that, we need to see signs of cool down economy. And in order to do that, we needed today unemployment rate to be high and payrolls to be super low. And we got basically the completely opposite. So be careful, analyze and digest these kind of situations, because we are skyrocketing on FOMO. And FOMO and greed is not good for anything, and more in this world of investments, of markets. Be smart and don't be the one that buy the top, and wait for your opportunity and wait for other signs that align with your position. Right now, in my opinion, bonds market are telling me don't buy this, because we are going to be way lower when Fed continue hiking and the pressure in the economy will show signs of weakness. That's when smart money will jump in, hedge funds will start selling, and we will see this kind of pullback down, and then you can buy weakness if fundamentals show proper data. That's my point of view. So as always, thank you for your time. If you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I upload new videos. Remember that I upload new videos every single day for market forecasts, market updates, and market recap. I appreciate your time. Remember that the trading day is not over yet. Let's take a quick peek, sneak peek. Nasdaq is super strong today, so be careful, take your profits, lock your weekend, enjoy your weekend, and be back on Monday. That's what I'm going to do. Remember, discipline and risk management are key for success. Stay safe, everyone. Have a nice weekend, and see you on Monday.